Hey, how's it going, everybody? Hope all you guys are having a wonderful day. Today, I'm going to bring you guys into my market recap of June 4th on how I lost over $3,604 in a little over an hour and 20 minutes. So, I want you guys to go ahead and understand before. I know that number is pretty big to many individuals, and trust me, it hurt. It was a lot of a capital loss to take for me. It really came down to, a lot of it being how much of the capital I exposed. Let me dive into this a little bit deeper. So the total loss on the position was negative 72%. Okay? Total investment at the beginning was $4,980. So almost $5,000 I went in with, and I left losing 3.6. So playing with $5,000 in any position, you got to keep in mind, these are 0-day expiration contracts that I was trading. Every 10% is borderline $500. $4,980, $498, 10%. 10%. So I could have made, let's say, just round it up to a 500 to make it easy for me mathematically. In 20%, I made $1,000. A 20% move, I got it. Let me show you guys my entry here. Let's go ahead and jump into this trade. And I entered here, went through some drawdown, minus 1,500, almost 20% right here, 25%, boom, 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 and then I came down. Right at these bottoms, initially, right entering after the first, I entered at 11:03. 12 minutes later, I'm positive, I believe it was like $2,000. I didn't pull the plug because I was waiting for this break of support. I wanted her to continue down and catch support until here. But she hit that support and came right up and just was teasing me the whole day. And during this time, 11:20 to 12:20 was 1 hour of me losing to, excuse the writing here, theta. So this is a very important concept. You can see the drawdown was significant. It was in the 2000s at some point. I'm watching negative 2000, negative 2400, negative 2600, negative 2800, negative 3000. And just like any normal individual, right? Guys, I'm not rich, I have savings, I have consistent income, I have, a decent amount that I made off of the stock market, but I'm not a millionaire. I'm only 23. I didn't grow up with rich parents. I didn't grow up around money. So the only reason I'm here today able to risk this type of capital is because I myself took big investments on myself. I risked a lot of capital on some very good investments when I was young, and it allowed me to grow my capital. I made a lot of money from the stock market. I made a lot of money from crypto. It's real, guys. It's real. And it changed my life. I was homeless at 17, couch surfing, up to no good, working, full-time jobs like Amazon. My first job was at Chipotle. I got into residential roofing, so I was in construction. I still sell life insurance. I still have essentially, a lot of connections in the solar door-to-door space. So I was always like in sales, and everything that I made, I always put it back into myself. I was very frugal. I was never the guy spending too much of my money. I was never the guy looking, where am I going to go on the weekends? I was always very conservative, I never really spent too much. Everything was always offense, offense, offense with my money. I was attacking to try to make more. In that journey, I've lost a lot of money, but I also made a lot of money. So when playing with $5,000, every tick is $500. That hurts. And I think any of you guys seeing minus $1,500, $2,000 disappear on the screen, emotionally, psychologically, it's different. It hurts. You have an attachment. We're humans. This means a lot to us. Bro, $5,000, every $500, you're talking about a car payment and every 10% move. What? An insurance payment every 10% move. I'm in the whole negative 2,600 around here. Minus 2.6K. All right. So, Jerry, we know you lost. What is it that you could have done better? Well, for one, this was a trade that lasted over an hour, 11:04 to 11:25, 11:26 actually. So let's say that is 11:04, 22 minutes. So an hour and 22 minutes. Immediately, I was going off of key levels, right? Initial entry, look at where I took it. The technical analysis was good. Could it have been better? Ever so slightly. I entered at a resistance right here, thinking she was actually at a top right here. She hit one. Let me widen this out so you guys see my screen, my perspective. We entered here. I seen resistance. She was coming off of a very aggressive buy day. She shot up from 751 to 757. For an ETF like SPY, that's a lot of capital, a lot of market cap growing right there. So she was coming off of this dump, jumped up today. I was like, all right, she found her top. She's done. She hit and kept going higher. I was okay with the drawdown. I was still very confident in my position. I was plus 500 around here. Came up, finally reached like plus, I think like 20%, 25%. There was a point of support right here, okay? And I chose to contest it. That's mistake number one. I've told you guys countless times, respect key levels. Bro, I tell myself it sometimes, but when you choose to not respect the key levels, you are truly taking a pretty crazy odd against yourself. You know, you're going against the market. You're going off what happened historically. What happened that is proven already. It hit 257.60, came up. Hit 757.60, came up. 757.60 hit. I don't know what in my mind made me think that it was going to break. Realistically, I thought buyers were going to exhaust. In my psychology, my mind, I was like, you know what? It's been an aggressive buy day. We're entering now the fourth quarter of the market, 11 to 1 a.m., no 1 p.m. Maybe buyers exhaust. This is an aggressive sell. Maybe we catch more sellers. Boom, 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 boom. If price would have reached down here to this next level of support at 757.3, I would have made close to 4,500. Actually, no, I'm lying. That's not a 100% move. I would be probably like realistically, a little more than like 60%. 60% on $4,000, like 26, maybe 3K. Honestly, it could have potentially been a 100% move. That much drawdown, those candles, I think you would have had an 80, 90% move for sure. So I could have made, you know, $3,600 if it would have came down. And I'm watching plus 2,000. So keep in mind the pattern of emotions here. The rush, I guess you can say the roller coaster, right? Starting off negative. Panic, fear, panic. Is it really gonna, you know, kill me? Panic, fear, running through my head, right? It's gonna happen to you guys. Finally, as I see the drawdown, relief happens. And it happens, it's psychology right here. Relief, right? Relief begins to get off right here. Now I'm break even. And then I see plus. Well, then I go from panic to relief to, oh man. A little bit of greed comes in, a little bit of, this is it, this is the move, right? I'm about to make a lot of money. These are the patterns of trading psychology that many individuals are going to run into. And there's different ways of managing it. One being percentage focused. Two, being capital focused. So for many of you guys in your day-to-day lives, as we have different financial situations, and some people pay more for life and some people pay less for life, some people have more money, some people have less money. When you run into this, someone that is not making a lot of money might think that plus $200, $300 is a lot. Someone that's well off in their careers, probably making, 10, 15K, 20K a month. Those entrepreneurs exist, by the way. There is people making a lot of money out here. So those individuals might think plus 300 is not enough on the same investment. Now, that's unique to everyone's personal situation. And that's why I stress your personal finance, like I did in my beginner videos. Watch them, because this gives you down to your specific personal situation with your risk and what it is you should be aiming to get back as a return consistently. So that's the capital, the 300, right? At this point, I'm seeing plus 2,000. It's not that that's not a lot of money to me. It's that I'm kind of looking for a higher percentage. So this is the percentage one. The percentage aspect is, let's say it's a $300 return. Well, for one, it could be a $300 return if it's, let's say, $1,000 risked, 30%. Or it could be a $3,000 investment with a 10%. Does that make sense? Same 300, but different percentages. So when trading, exposing more capital allows you to make more on less percentages. So there's two ways of trading here. You can trade with low capital, expect high percentages, or you can play with high capital and expect low percentages. This is a theory, and I hope this sticks with you guys because it's real life. So as I expose $4,000, almost 5 by the way, $49.80, as I expose $5,000, I'm expecting close to a 30-40% return. So 5 times 4 is $2,000. I had it. I chose to contest the market here, and that's why I went wrong. But look at the, I don't want to say realistic, because reality is subjective to everyone's perspective and situation. But I recommend, as a general guideline, for you to understand where to take profits at, I oftentimes tell a lot of my clients, compare yourself to traditional investments, Roth IRAs, high yield savings accounts, 401ks, you have your bank CDs. These max maybe 15% a year. I did 40% in 15 minutes. Wow. That right there should have been my guideline, right? That's where I went wrong. And that's where I feel like some of you guys might go wrong, because in trading, in your career, you will see some trades go for 80%, 90%, hundreds of percentages, thousands of percentages. And then you get tricked. You want to hold for more. You want to go above the 40%. Sometimes look for 100 percenters, 130, 200 percenters. The one that made me to who I am today was 415% on $27,000. That right there, right, is a big component. And I recommend you guys be not realistic, but understand how much percentage return you're creating in the amount of time. Because if you focus on the capital and the money return, you're always going to lose, because you're going to see an amount of money mentally. You're going to see a dollar amount of money that will aid your life. Meaning that if you risk $1,000 and you see 30%, you might want to take that. But now, if you're risking $100 and you see 30%, you might not want to sell it. It's $30. What are you going to do with that? Now you understand the concepts, the philosophies, right? A little bit of these theories of trading, how to view the exposure of capital. So if you're aiming to make more money, I'm not going to say it requires exposing more capital, but to have a higher success rate, sometimes that's what you need to do. Because people try to to step into this, unfortunately, it's a very common psychology, to step into trading trying to expose minimal amount of money to make exponential amount of money. It doesn't work like that. Banks, why do you think banks only offer you 2 to 3% return? They offer you guys that because that's the minimum that they have to be able to give you guys. They're probably aiming to make a 7 to 8% on billions of dollars. They only have to give their whole client base 2 to 3%. If they make anything above that, they're safe. But they're managing billions of dollars. That's why they're targeting such small percentages. You as a young individual or early in your investing journey, you have to begin to develop yourself to understand, hey, to move forward and actually scale capital, I have to begin to increase my capital position. Now, does this mean put everything you have on the line? Absolutely not. But it does mean gradually increase your position sizes when you're aiming to make a capital return. If you're not going to be if you're not looking to make X amount of money, you could play small capital, but now respect the percentage. If you're looking to make a lot of money, you have to kind of expose a lot of capital because then the percentage gets smaller. But if you're trying to be cheap, beginners, getting your feet wet with your first 500, your first 1,000, respect that percentage. 10 to 20%, 30%ers. That's a good guideline. That's where you want to take profits. So that was mistake number 1. Not respecting the percentage and disrespecting the technical analysis. Mistake number 2 that I will share with you guys on this one. I do this uniquely, always trading 0 DTEs because I'm aiming for such a high return in a short amount of time. I often tell you guys, this isn't a get rich quick. It isn't going to give you the capital that you're aiming to with a little bit of money. But it is a possibility for you to make much more returns playing 0 DTE than it is playing a swing or an intraday contract. I have been finding myself in this pattern of consistently aiming for 0-day expiration contracts to seek quick returns. So I agree, I've fallen victim to this kind of impatientness to create very high returns for myself. It hurts. Yeah, I understand. But with this impatientness comes mistakes, comes risking more capital. You can be impatient with $100. You're not going to get very far. You're impatient with, 5,000 in one trade. You could get, your 20%, make 2,000. And there you go. But if I would have corrected my expiration date on this trade, which was the 3rd mistake, my expiration and strike price, my strike price was at the money. I was going for 757 puts. If my strike price or my expiration date would have been one more day out, it hurts me, it pains me, because I owned 172 contracts. Actually, my first position was 100 contracts. I had 100 contracts, same day expiration. Net investment 5,000. That same 5,000, if I would have put it in tomorrow expirations, I think contracts are going for $1.32. I want you guys to notice something here. Look at where the stock opened up at today. Started in the after hours, but after I closed. But But opening up this, look at that. Look at if I would have just added one more day. We went from 757, I had 757 puts, to 734 with 100 contracts at 5,000. Hypothetically, let's shave it off. I got 100 contracts because it's last hour of market, they're cheap. Another day expiration, $132 a contract. Let's do the math. $132 a contract. Let's round it up to 5,000 for my, or let's do it exactly 4,980 divided by $132 a contract. I would have owned 37 contracts. There's the math right there. All right, 37 contracts. Check this out. 37 contracts times $1,800. $66,600 in less than 24 hours. Let's say I didn't sell at 66,000. Let's say I would have took 30,000, 20,000. That's 5,000 into 20,000 in less than 24 hours. Where else are you going to create that kind of return as a normal individual? Someone that doesn't have business relationships, someone that doesn't have rich parents, someone that doesn't have, crazy investment partners, someone that isn't in real estate, someone that doesn't have a lot of money. Where are you going to make that kind of return? The stock market, trading stock options, is the only one that I've been able to uncover in my reality at 23 years old. And the biggest mistake here for me was trading 0DTE, falling for that impatientness. Because I knew it was going to come down. I knew. I entered at the top of the top, 757. Look at the resistance around this level. I think it's 756, 760 up here. But we hit, came down. All right? We never got that close. We can't go above 760. Everything rejected down. As soon as I hit that top, if I would have just had one more day, would have made $20,000. Opportunity was missed due to the expiration. 3 mistakes that made me lose $3.6 thousand in 1 hour and 20 minutes. If I would have made that same capital one more day, I would have made $30,000. And this is another component to trading as well. A lot of people are afraid to invest and risk money. They are scared. They don't do it. They're afraid of risks. They enjoy comfort. That's normal psychology. Your mind will adapt to its environment and not choose anything more or know of anything more until you switch, until you risk and you lose and you risk and you win. Then you understand more is possible than just what your job pays you, than what you know and your friends tell you, your family tell you, than what traditional people know. That's huge, bro. And it's scary. It's difficult when you're working your ass off, trading so much hours of your life, balancing the cost of living, balancing supporting a family. But if you don't do it, no one else will. And look at the returns that are possible. I know people that are doing great in their careers. I work with police officers. I work with married military personnel. I work with nurses. I work with electricians. I have an engineer. I have normal UPS workers. I have Amazon workers. All of these individuals invested in themselves, and they've seen money through a whole different lens than when they first joined, because it changes. You just need a group to show you. You need a team to help you out there. And today, when that drop happened, I missed it, but I made sure everyone else made money here in my Discord. Here are some of the results from trading here June 5th, when the move did happen. My client made over $4,000 in profit. Another client made over $3,000 in profit. Another client made another $3,000 in profit. And another client made too close another $1,000 in profit. All of these individuals learned this skill set, invested in themselves here, learning from me at SoCal Trading Group, and it absolutely changed their lives. And this is the reality of the world. It's bigger. I didn't know it. No one taught me it. So I hope to share it with you guys. And I hope to help you guys understand that this risking, the capital thing, the money thing, it's a part of life now. There's no prayer. Prayers are real. A lot of hope and faith come into effect. But those alone are only going to get you so far. I often tell myself, God will steer the boat, but you have to row it. You have to put yourself out there. You got to go, And I hope this message finds all of you guys. And I hope you guys, see the... So as I was saying, I hope that you guys see how much capital it is I take on myself And of course, I have higher experience, higher confidence level than the vast majority, but doesn't mean you have to go put 5,000 or an extraordinary amount of money. But one thing I will tell you is test it. Get uncomfortable. Take a little bit of a bigger risk sometimes, and you will see exactly the benefit of trading. Scared money, I'm not going to say it doesn't make money, but scared money has a harder time being profitable in the stock market. Why? Because it's not about being scared, it's about being well informed. How good was your technical analysis? Entry. Were you trading based on a setup? How well informed were you? Did you know the political data? Do you know the economic data? For example, today's drop that made everyone money was due to the job reports. Unemployment came in low. Employment job numbers came in high. We have a healthy job market. We have high inflation. The Federal Reserve and many economists are weighing in that they might raise interest rates. If they raise interest rates, the cost of borrowing money increases. We already have gas so high because of the Iran and Israel war. That's the cherry on top to begin to make investors pull down. So many investors fear that increase in interest rates, and they sold off the market today. Did you know that? Did you know that was the reason why the market sold? I did. That's the work. That's what trading demands and requires of you. And me, coming from a construction background, bro, it's not lifting up shingles up a 20-foot ladder, It's not working in the heat of the summer at 80 degrees, 90 degrees in long sleeves. It's a whole different reality, man, and it's not hard. You can have a normal career, your normal day-to-day life, but just sprinkle this into it. Instead of sitting watching your show, instead of sitting listening to music on your drives to work, change those habits for yourself to something where the information or the content being consumed is beneficial. It's informative. It's educating. That shift, unfortunately everyone in this world is pretty addicted to technology. Everywhere you go, people are stuck to it as if they're glued to a screen. A lot of people are being well informed and gaining education because they are choosing the different topics, the different, you can say, genres, right, in their content consumption. People like me, I'm no different. I didn't go study economics at a, Ivy League college? No. It's all there on the internet. You just gotta put in the time. And it's very minimal. You just need the guidance to know how to navigate it, how to understand it, how to draw these, hypotheses, these conclusions. It takes some experience. It's a little bit uncomfortable, but I'm 23. Why not do it now? Doesn't matter if you're older. Why not learn this, get it over with now? People that I work with are in their 30s and 40s. They're beginning to understand the importance of it because they see the money. And that's the negative side of trading, I guess, and going this advanced or this in-depth into it, that you begin to, really change genuinely because you see the positives, but for those that don't see the positives, they'll never put in that work to take it a step further. Me, I took it a step further because I made $170,000 in 2 days. I could prove that. It's right here. This is my Robinhood account. Robinhood, right? Opening it up live on TV. Look at this. April. Biggest day of my life, bro. And it marked me, it scarred me for the rest of my existence on planet Earth this 1 month. $116,000, right? Look at that. April 4th. Okay? April 11th. 6 days later, $65,000. What's 116 plus 65 grand, bud? It's almost 180,000 in a week. Where else does a 22-year-old, like I said, no rich parents, no fancy business model, I don't own a tech company, I don't own a crazy insurance company. I've never been educated and helped by anyone in my life. Didn't have no parental guidance. My parents are first generation American citizens. They're they're mundane to a different form of living. I can't grasp this knowledge from them. Took me years to develop it. Countless thousands of dollars I lost to begin to understand the importance of macroeconomics, political data, company data, headlines in this trading, incorporating technical analysis, incorporating the right strike price, the right expiration date. Look at how much I, went ahead and was drawn down today because of that mistake in my expiration date. These lessons, you're not going to get them watching YouTube videos. You're not going to get them all by yourself guessing. You're not going to get them gambling in the stock market. You have to start becoming conscious. You have to introspect. You have to reflect on every single decision, trade you made, right? And figure out how to make it better. What did you miss out on? Oftentimes it's information. A headline, a tweet from Donald Trump could flip the market on its head. It's the reality of the market that we're trading in right now with social media and all these different media influences. It's not hard work. You're not killing yourself in the sun, but it's mental. You got to sit down, read some articles. You got to learn how to listen to, educated people talk about economics, political data, what's going on, different theses, narratives in the market, and actually connect to it, actually intuitively, active, recall it, digest it. Not just hear it go out the other ear, but hear it, synthesize, digest, draw conclusions. Training that part of your mind as soon as possible in life will always help you to be a better investor, better businessman, better person. It's a skill set. It doesn't happen overnight. It took me 5 years. But that's why I'm able to help people, generate returns in the stock market well over the thousands. 3 clients right here that you guys are seeing killed it today. All because they took a step that our parents, our family, our grandparents didn't teach us. They exposed themselves to a new level of knowledge, a new community, a new set of people like myself and other traders that aren't afraid of playing with capital and understand it's a journey to begin to learn this. And it's way better to start now than 10 years, 5 years down the line. Nothing's going to change if we don't. We have to create the change for the change to compound into the future and actually become a reality. A lot of people don't see that, but I feel like this is a long market recap. It's a big one to me to lose this much capital, and I want to be as transparent as possible in these videos to help you guys understand what the game is. Some people, you guys want to make hundreds of thousands of dollars a year, 100,000, 200,000, 300,000, $1 million, right? How in the world are you going to make that being afraid to risk $1,000, being afraid to risk $1,500, $3,000, being afraid to risk $5,000, even $500? People are traumatized at the thought of that, but their expectations and dreams for reality are so up here. Where in what world is that a reality? We're not playing the lottery here. We're playing the game of the banks, the game of the educated, some of the most experienced and well-advanced finance individuals of the world. This is it. And it doesn't take an Albert Einstein to figure it out, or at least be able to make a decent amount of income from it. It just takes experience, patience, and the ability to learn. We all have those. If not, we can train them. But I hope you guys enjoyed this market recap. Thank you guys for watching. Jerry Trades the SoCal Trading Group. Over and out.